When I arrived at Mr. Plimpton's office, I knew I lost him. He was ready to retire, transition his business, but at what cost? Outrageous taxes. Much less wealth to leave to charity and loved ones. Are you the CPA?
Who's asking?
McMurray, that's who. She was the CPA, all right.
I assisted Mr. Plimpton in the sale of his business. It was a conventional sale, I assure you.
Mr. Plimpton could have used an ESOP, an employee stock ownership plan to transfer ownership.
E.S.O.P.s?
Her eyes were earnest. She wanted the best for her clients, so I told her everything I knew about ESOPs. I told her about Revenue Ruling 5960, which often allows ESOP selling prices to be substantially higher than a sale to a third-party buyer. About how almost every other sale of a business is after tax, but how an ESOP, by statute, is pre-tax. As a pre-tax transaction, the ESOP deducts the entire purchase price and can pay 0 federal and 0 state income tax. The tax savings are potentially huge. About how, if planning is done well, the owner can pay 0 capital gains tax at the time of sale, and might even defer capital gains taxes for many, many years.
Carrot?
That wasn't all. I explained how ESOPs allow the business owner to both sell and maintain managerial control of the company for as long as desired, and to retain the power to appoint the next generation of leaders. No other sale of a company lets an owner keep control. I also explained that with the right plan, it was possible for the selling owner to gain significant future equity rights in the ESOP company, and that such equity rights could also be used to pass wealth to heirs, or to incentivize key employees, or to do both.
I feel responsible.
There's one more thing a CPA might not know.
What's that?
The state and federal income tax rate once a company has gone ESOP. Done right, it would be 0 on both. Double goose eggs. Double indemnity, you might say. What if the company no longer needed to pay any state or federal income taxes, while its 3 main competitors did? It might be a game changer when bidding for business. The ESOP and its 0 tax rates just made it a lot easier for that management team to run the company successfully.
I'm sorry, McMurray, I didn't know.
Don't feel bad. Most CPAs don't know anything about ESOPs. The important thing is that you know now. If you are a business owner and think an ESOP might make sense, please give us a call. We'll work with you and your CPA to create the right solution.